Hello everyone, today is Friday, October 15th, 2021. My name is Evan. Welcome back to our weekly stock market analysis videos. If this is your first time tuning in, welcome. Thanks for joining us. Thanks for being here. Here's how we break up our analysis. We start with part one, where we look at everything that went on this week in markets. We go beyond price, we look at correlations, credit markets, market internals, all the good stuff, and pick apart everything that stands out, looks interesting, looks different, looks insightful. And then in part two, we jump into the charts, we look at those longer term trends, make sense of everything from part one, and try and best position ourselves looking ahead. So hopefully that sounds good to you. Let's get into some of the headlines from this week. So the big takeaway here is we had stocks breaking out, up and out of their ranges. So we have been in a battleground area in the indices. No news to any of you, I am sure. We've been covering the levels to pay attention to, the back and forth action, and this week we got some confirmed short-term breakouts of those ranges. We also saw yields start to back off a little bit. Maybe that gives a little, paving the way a little bit for stocks. We also saw the VIX fall back towards 1-year lows, so back into that 16 area. So quite a fall from the 22, 23, 24 levels we've seen over the past couple of weeks. And we had earnings season officially kick off. And earnings season officially kicking off with a breakout in stocks is a good sign in general as well. You're getting the perceived sort of early reactions of the market, and those are bullish. So those are your big takeaways for this week. Let's jump into some of the data here. If we look at the right-hand column, this is the 1-week numbers on all of the major markets. So we've got the Dow Jones up almost 1.58%. Got the S&P up almost 2%. Nasdaq over 2%. Notice, look at that 1 month for the Nasdaq. It's been trailing, so it's still down over the past 1 month. And we look at the Russell was up 1.5%, and then world stocks coming back. So world stocks minus United States actually up the largest in this list here, 2.51%. So a very strong week across the board. And if we look at market internals, so I love this chart here, this table, because we are seeing exactly what we wanted to see. We're getting some improvement back here in market internals, specifically looking at this first row, the 52-week highs minus lows. So remember, we have been on very close watch here as this has been skating on thin ice, very low positive numbers. +5, +8, +11. That's what we've been seeing in terms of daily readings. And this week, we can really start to see these numbers pick back up to the upside. So this is exactly what you want to see. You want to see a breakout in price. You want to see price confirmation, directional confirmation, but then you also want to see it backed up by a lot of these other metrics, measurements that we look at every single week here, market internals being one of them. So the fact that we are getting back into triple digits here is a strong constructive sign. I want to see that continue to keep up and keep pace. We had 451 net 52-week highs made this week. Remember, Friday's numbers, unsettled numbers, those are always my estimates when I record on Friday because the numbers come in a few hours later. So we'll see what that finally turns into in a final sense, but still pretty constructive here. Cumulative AD line also pretty strong this week. It was a shame to see this really close negative. It was up pretty sharply here on Friday in the open, but we did see that weakness into the close. 2,700 though, still pretty constructive. And then take a look at the percentage of stocks over 20 SMA, up at 75%. That is the largest, highest reading we've seen in quite some time. If we take a closer look at those market internals, take a look at this chart. So remember last week, watch last week's video, you can remember that this chart was very sideways, just looked like a sideways line going across the whole chart. And now you can see the expansion to the upside here. So this is what, again, you'd like to see. This is the same row, top row here. It's just looking back over the past 30 days and summing everything up. And so basically you want to see a nice uptrend, starting from the bottom left to the upper right. And you pretty much have that with the scope of this chart. So nice improvement there, like we had mentioned. Now, if we look at sector performance, you can see basically everything was green this week. We had materials, real estate, and consumer discretionary in the top of the list. Real estate hasn't been up there in quite some time, so interesting to see real estate back up there. And all of those are up almost 3.5% or more. If we go to the downside here, we've got communication services, we've got healthcare, we've got staples. Both 2 out of the 3 were still up almost 1%. It was just communication services here down almost 1%. You can see on the 1-month numbers, this is also one of the worst performing now over the past month of trading. If we take a look at correlations, there's really nothing that stood out to me here. Looked pretty just kind of noisy and random and not too much to really cling on to here. I mean, there's a little bit of some weekly inverse, dollar correlation going on this week, but really, I'm not seeing too much. Take a look yourself, hit pause on the video, see if there's anything that jumps out to you. Leave a comment below, but I'm not seeing too much there. Remember, these are 10-day correlations, so they are inherently noisy, but we understand that. We are trying to just, kind of pick apart those moving parts that are moving together. So volatility here on the week, very constructive. Blue line is this week. Orange line was last week. So volatility coming down across the entire term structure. That's bullish. That's what you want to see, as fear kind of coming out of the market and a little bit of that, of that anxiety kind of dropping out of the market back down to a 16.39 is how we went into the weekend. It's pretty much near year-to-date lows. Around that reading. If we take a look at interest rates and credit markets here, so this was a kind of a mixed week on yields. So we had the long end of the curve. So looking at like the 30-year yield was down almost 5%. So that means your TLT was doing well this week. But the short end, so if we're looking at like the 5-year, the 2-year, you go short, and interest rates were still kind of climbing up there. 10-year was kind of in the middle ground. So it was at least enough off the gas pressure, right? Because yields have been kind of just, on a tear to the upside. And again, it's generally speaking, fine when yields are rising, and that that can be an okay scenario. Stocks can still go up while yields are rising, but you just don't want to see them scream higher. It's the magnitude, it's the acceleration, it's how they get there. So the fact that they cooled off a bit this week was good. We see investment grade bonds and high yield bonds both rebounding nicely here. That's good. That's again was one of the biggest concerns we had last week. That was one of the things I highlighted, that if this market's going to continue to stay weak here, I mean, this was flashing one of the most concerning things to me was the performance out of the bond market. And we're seeing a little bit of reprieve here this week. If we take a look at dollar and commodities, so again, a little pressure off the pedal a little bit with the dollar index kind of, I don't even want to say rolling over yet, because it's not quite rolling over, but certainly at least closing down. That's good, generally speaking, just to see the dollar kind of lay off a little bit. We saw gold rise this week, silver rise, Bitcoin strong move again, 12% to the upside. I think it did 12% last week. We had, of course, now we kind of see the lead up of this price action, right? Kind of someone always knows ahead of time, or the market starts to price these events in, because we learned, of course, now that it looks like we're going to get the green light to a futures product ETF for the US markets, which is exciting to at least be able to then get Bitcoin into the hands, regulated, of millions of more people in their brokerage accounts. So I guess it's last I heard, it's not totally stamped out official, but it looks pretty on the way. So we'll see if that can get officially green lighted over the weekend into next week. We see agriculture was down a little bit, so commodities coming off a little bit. Crude oil stayed strong. Natural gas giving back just a little bit. So report card for this week, check marks across the board. It's been a while, but the market's getting a solid A for its performance this week, right across all of our measurements here. Is looking to actually maybe even broaden some of these out, or add more to our report card, make things a little more interesting and challenging. So I might have some updates to this as we go forward, but that's the report card for this week. Let's take a look at how we are positioned here. So the top system here, Merlin, probably looks pretty similar to last week's positioning. It didn't do a whole lot. It pretty much just stayed in there. It kept the cash on hand that it has. So, I mean, it's only, 10% cash on hand, but that is, funny enough, one of the highest readings we've had all year long, frankly, as it kind of feels out what this market was going to do at this past week's critical area, and it obviously enjoyed this rebound, of course, this week. And I may have rotated a couple of positions, but more or less staying the course, invested in this market, and participating in the longer term. That is what it's designed for. It tries to ignore the 5-6% pullbacks in markets. It doesn't get caught up with that. It tries to keep its eye on the multi-week, multi-month picture. Lamerick here pretty much only cares about the next handful of days, and it operates on a totally different time horizon. You can see right now it's actually positioned short going into the weekend. It's very weakly short, so it's mostly balanced out or cash neutral, but it is tilted here to the short side just a bit going into the weekend. Haven't really looked to see what the orders are looking like for Monday. That might get balanced out a little bit more, but that's kind of the way things are shaking out. I just posted September's performance report on the blog post. I kind of fragment out updates on all these trading systems across all platforms. So YouTube, I usually do the Friday update here. Every month post a performance report to the blog, and then on Twitter and StockTwits post random updates to the trading strategies. So if you are trying to kind of just get a closer feel, get your hands around where the movement's happening, you're gonna have to check all those sources, and we kind of sprinkle in updates on where our positioning is changing. So hopefully that sounds interesting to you. If you do want to learn more about these trading systems, we have trials, we have memberships, we deliver trade reports, information, very easy to trade after the market close trading systems. So check it out at that link appearing in the top right of your screen. And with that, we'll be back here in just a second with part 2. All right, we are back. We've got TC 2000 open. We've got our equity market grid showing. Price itself is the white dashed lines you see on all these charts, and our multicolored dots that you see here, so green, yellow, and red dots, are a custom smart trend filter that we've developed. Just helps us easily measure trend strength, path of least resistance, who's winning the fight, and that is a custom indicator of ours that we have available. If you're a TC 2000 user or a TradingView user, we have the indicator for both platforms. So if we take a look here at the weekly time frame, that's what we're looking at. That's where we like to start our analysis. We like to just drill down, top down, big time frame first, and we look at these longer term trends, and you can see that most of them here, all of them here, are actually still in transition mode. Now, we always like to say we give the benefit of the doubt to the prior signal. So in this case, in all cases, it's coming from the bullish side for the US market. So the S&P 500, so it's been bullish all along this year. It started printing some turbulence over the past 4 weeks, and it still continues to print turbulence here. If it has a strong week next week, if it has follow through buying next week, then this might flip back to green. But so far, price is holding above our line, our level, our filter, and that is good. And ultimately, that's what we want to see. We have the Nasdaq, which is similar camp. You can see this bounce off of this general area here where our smart trend filter lies, has been a little more shallow than the S&P, but still it's holding. Prior signal is green. We'll see if that can hang in there. And then our Russell 2000 continues to remain in the yellow transition state here. So basically, it has not been giving us a signal. It hasn't been saying to buy. It hasn't been saying to sell. It's basically been saying expect chop, uncertainty, and noise. And it's been doing a pretty good job at forecasting that, and that hasn't changed. Now, ACWX here is interesting. So this is, again, international stocks minus the United States. And remember, last week we got this red dot printed. We got our first weekly sell signal on a major market in a very long time. Basically all this year, going all the way back into 2020 is the last time we've seen any type of red dots. And that was pretty surprising to see that. But notice this week it went right back to yellow. This is pretty rare. So this indicator is actually designed to reduce whipsaw. It tries to take the positive aspects of trend following, trying to just follow that dominant trend without the whipsaw component that really can kind of beat up trend following systems or indicators. And so this is pretty unusual to see the single red dot and then it go right back to yellow. But that's what happens when you bounce back very aggressively with a weak sell signal last week and then a strong rebound this week. We're back to yellow. So be interesting to see how this shakes out over the next couple of weeks. Again, we do say we give the benefit of the doubt to that prior signal, which in this case is a sell signal for the ACWX. So we'll see how that shakes out into the month end. Let's get down to a daily time frame. So if we look at all of these markets now with a daily lens, you can see things look much more constructive. So the S&P 500, a lot of turbulence here. So a lot of turbulence over the past month of trading. But notice today, Friday, we got our first green dot printed on Friday's action. So we are finally now getting strength, commitment coming back to the shorter term timeframes. That is encouraging. Again, starting to see signals line up here, price breaking out, trend model starting to move up. Market internals starting to be supportive, VIX falling down, credit markets holding up. These are all things that are starting to get into motion here that this breakout might be for real. Nasdaq hasn't quite turned the corner just yet, so it's still in the yellow zone. Take a look at IWM printing its green dot here as well, and then even ACWX on a daily chart now going back to the green signals. So that's our trend model. That's our simple heuristic there to take a look at what's going on. Let's get a little bit tighter in the action and take a look at price itself. So if we start with the S&P 500, this has been the roadmap. And one of the things that we were talking about last week was this idea. So when we had last week's video, so we were, let's see if I can do this really quick. Sometimes I can't. So, close enough. So this was Friday's action here, last Friday. And we talked about how the close wasn't as ideal, but it was still constructive to see this gap up and move. And the bullish scenario that we sort of laid out here was a check back to fill this gap and a higher low to get put in, and for price not to fall all the way back down to 4,300, test support, fall into this messy range and get trapped here. So we wanted to see it kind of check back, put in a higher low, and then move higher. And of course, now in hindsight, we see that is the perfect scenario of what happened. Now, we didn't predict that. That's not the call. That's not the point. The idea here is that we took that as our bullish scenario, as our most optimistic scenario, a check back, put in a higher low, and then springboard higher. And so if you had that roadmap, that possibility of what the market might be able to do under the bullish circumstance, then you were very likely able to capitalize on this type of move. Maybe you were starting to feel out a position here on this nice hammer, and then you were adding at the open on this, follow through day and sort of, buying on Thursday as we started to move higher. And now you're sitting in a decent spot on Friday, right? One possible scenario. Of course, everyone's managing things differently and has different strategies, but that is, effectively what transpired here. And if we go back to our other grid where we're looking at, the more broader levels here, we have a couple of things that we're looking at. So we're coming back into this 44.85 spot. So this is where we chopped around. So this zone right in here. It's where we chopped around before we broke down, before we made that second leg lower. So I would expect, price to, hopefully, in a perfect world here, we move back up, or we continue to move higher here on Monday, and we challenge this 44.90. It'll be interesting to see how we shake out right around here. I think that'll be a little bit of a hesitation spot for the market. That to me is really the key area we want to see breaking out to the upside, because there's not a whole lot of prior supply back above that zone. So we really are looking to get closure over 44.85 or so, and that's the level that I'm most interested in on the upside. Above that, it's a very quick shot up to 45.44, which were the prior all-time highs. As it stands right now, the S&P 500 is, a pretty measly 1.6% away from all-time highs. So it's not that far, and it can happen pretty quick. The other thing I wanted to point out was just the weekly chart. So again, zooming out to the weekly chart and broadening out that time horizon often can make things look a lot cleaner and just simpler to navigate. And when the daily chart looks like a headache, try and zoom out a little bit. And, you know, when we look here at the weekly chart, this doesn't look half bad, right? It looks like 5 weeks of pulling back, of about a 6% pullback, which is pretty nominal given the March higher that we've seen over the past 2 years. And now we're starting to resolve to the upside. We're starting to get that week one sort of breakout here. So this looks pretty darn good. When you broaden out the time horizon, obviously, you know, again, we can check back a little bit. We can make some uncertainties happen. We can rug pull a couple of days, but generally speaking, the structure here looks pretty nice for the S&P 500. On the downside, so again, if everything starts to unravel here, I'm basically now keying off of this higher low. So just that low that we pivoted on Wednesday, that's what I'm going to be keying off of. That's a good spot to maybe manage risk against, or to you know, think about health of the market. I'd like to see us, you know, I mean, honestly, I'd like to see us stay even higher above that, right? In a perfect world, we're going to stay above 4,400 going forward if we're going to really keep trend and momentum in here. But I mean, if we want to give some room and you know, a little bit more just noise, then this is the pivot area that I'd be paying attention to on the downside. If we switch things over to the Russell 2000, so the Russell 2000 tried to get going this week, and it is obviously still very much in this range here. And I did a little bit of discretionary buying here. So most of my trading now is just dedicated to the Merlin and Lamerick trading systems, but I do have a longer term kind of position account that I will still make decisions on. And I did add some IWM this week. Obviously, I did not like the way this closed on Friday, and it's still an uncertain sort of setup as of right now. But I like the fact that we are at least driving off of these lows here. And that's probably where my general stop is on this. I mean, if we start to roll over and start, you know, getting back into the muddied mess here, then, you know, my little, you know, sort of cute early entry here is just not going to pan out, or I'll just take the small loss and wait for a better signal. But I did initiate here in the Russell 2000. I'm still a believer that if this market is going to continue higher into year end, that the Russell might finally start to ignite out of this range. We'll see if that actually happens. Right now, I do have that long position in there. And again, that weekly chart does clean things up a little bit. So again, you can see up 1.62%, starting to, you know, take out or try and close over some of these recent highs here and this range. So it's trying to do the work, but we'll see if it can actually get there. If we finish off here with the Nasdaq, so the Nasdaq, you can see also on this weekly chart, you know, this pullback got a little more, you know, a little more deep in its magnitude. So this was 8.5%, and maybe not as perfectly clean here as the S&P 500, but still, excuse me, a good move to the upside, a good weekly move to the upside. And you can see on the daily chart here, it is lifting up, closing strongly here, and did put in that higher low, just like we talked about for the S&P 500. So on this one here, you know, I'm pretty much looking at, you know, this zone here, 370 that it closed at, is definitely an interesting one. That's where we found resistance, and some buyers and supply came in August. Got some pivots and a loss of big gap down that occurred back on the end of September, basically right into this range as well. So I want to see this back over 370. That's going to give me more confidence in this name. But again, it's still, you know, breaking down trend lines, lifting up, closing strong, and all the good things you want to see. So that's it. That's the market rundown there in terms of price action. Let's get into some of the other influential markets as the VIX. So look at the tumble of the VIX here. So this was trading very stubbornly in the low to mid 20s just 2 weeks ago, and you can see it's, you know, basically down about 35% in the past 2 weeks now. It's trading back just over 16. You can see 16 is essentially these year-to-date lows where it's been very comfortable kind of getting down to. Now, coincidentally enough, it hasn't been staying down here too long. So we have been, you know, getting down to 16, and then, you know, you get your next fear event, or the market tends to get a little anxious again. But still, it's a good spot to be in from a bullish perspective, is to be in the teens, and especially in the 16 to 18 zone, I think is a good sweet spot for this market if it can stay and settle here. If we take a look at the US dollar, you can see the US dollar, this was again the interesting moves that were happening here. Big volume coming up. This is breaking to year-to-date highs, and now it's starting to just kind of taper off a little bit. It's not quite rolling over yet, but it's clearly kind of just, digesting a little bit in this range. I think all else being equal, probably want to see the dollar roll over, kind of go sideways rather than just keep ratcheting higher. But for now, we'll just keep an eye on it. But so far, cooling off. I think the market's generally speaking like that. I want to throw the emerging markets in here as well. We never look at emerging markets, generally speaking, but I just caught my eye here. The EEM weekly time frame, even go down to a monthly time frame, starting to look kind of interesting again as it finds support around $50, especially if you do believe the US dollar might start to roll over here. It's going to be a good tailwind for EEM. So little kind of bonus trade idea in there. Probably talk more about that maybe next week in the intra-week videos. So that's, I think, what I got for the major markets. Let's take a look at some sectors and industries to kind of wrap things up here. So we always like to run through notable bullish and bearish sectors and industries in the market. So let's just go through real quick. We got credit services here, financial credit, heavy volume coming in, closing at new kind of multi-month highs. We see technology, information technology services, above average volume, closing at new highs. Conglomerates starting to lift up. So interesting big range here. A little uptick in volume, starting to close up towards highs. We see aluminum getting some good volume, close at highs. Auto parts moving on up. Healthcare moving up. Railroads, nice follow through week here as well. Retail in the REIT space. We see real estate, which again, we talked about at the top of the video, was one of the leading sectors. We see solar starting to perk back up. It's an interesting one. I know a lot of traders like to play in this space. So take a look at this consolidation. Take a look at solar. That's an interesting play there. Business services starting to perk up. We got chemicals, very wide, diverse, trucking, insurance, farm products, beverages, wine, home improvement, new all-time highs, financial data, new highs, industrial, new highs, consumer discretionary, new highs, credit services, back to the beginning. So lots of diversity here in the number of sectors that are moving up, breaking, and are notable. And on the downside, there were none. So none in terms of at least the way I am scanning for these sectors and industries. So that's what I have. That's the wrap up for this week's video. Let me know, leave a comment below. What are your thoughts on this market? Believe in the breakout? Saw a lot of sort of pessimism out there. I feel like sentiment was a little groggy over the past week or two. So wonder if that's changing. Leave your thoughts below. Let me know what you're looking at and have a wonderful weekend. I'll see you back here next week. Don't forget to subscribe to our channel if you like these videos, if you want more. They're free. They're on YouTube, and you can also catch them on our Trade Risk blog at thetraderisk.com. Have a great weekend. We'll see you back here next week.